Question number 3 was asked in an exam, CME Inter. Let's try to solve this illustration. You think journal entry is one of the easiest content and may not be expected in your exams, but it was asked in Inter level. Okay, so you have to be master with the fundamentals also. Question number 3. Journalize the following transaction in the books of Shiva. 1524 started business with 5 lakhs, of which 50% amount was borrowed from SBI, 20% amount was borrowed from his sister Patta. Right. Maybe the remaining 30% may be her own contribution. Okay. 50, 20 and own contribution could be 30. Clear? Now, money comes in, the entry being on 1/5/2024. Okay. Now, maybe in the form of cash or bank. The amount contributed, that amount for the capital purpose is 5 lakhs for starting the business. Out of that 5 lakhs, 50% is SBI loan from SBI, 2.5 lakhs. 30% from Patta, loan from Patta or Patta's loan. 20% may be 1 lakh. Remaining own, the own contribution is named as capital, the value being 1,50,000. 5/5/24 purchased goods from Chinnu Mart worth rupees 1,60,000, 25% trade discount and 40% amount paid in cash. So 5/5/24. The list price, the price appears in the price list, is called list price, 1,60,000. 25% being trade discount. Trade discount should not be shown anywhere. So you have to remove that 25% on this, which is 40,000 rupees. 1,20,000 is the original value for the asset. Out of that, 40% in the form of cash, 48,000 being cash. Balance, we assume it may be in credit. As the name is given, we can use the name here, Chinnu Mart. Balance, how much? 72,000. Clear? So the journal entry being purchases account debit. Purchase account debit. The value of purchases being 1,20,000. We never care about the list price or trade discount. Immediately we made a payment of say 48,000 rupees. Balance 72,000 payable later on. Until that period, we have to keep the party's name in our mind to pay it back. Okay, that is 72,000. Next entry being 8th May, sold goods to Sadish 60, 20% trade discount and received half the amount in cash. Okay, it's all about sales. 8/5/2024. The list price, in this case being 60. 20% trade discount should not be shown anywhere, so it should be removed for valuation purpose, 12,000. The actually 48,000 is the value we are going to show for the sales. 1/4 in the form of cash, 12,000 rupees. 3/4 may be in credit. In case of a sale in credit, the party's name should be shown here. So Sadish name is shown here. The journal entry in this case being, we get the money, so debit cash account, value being 12,000 rupees. To the extent amount recoverable from Satish, I debit his account. Means I could recover that later on. It's his own liability to pay us, or it's our asset. So to sales, the value being 48,000. The value being 48,000. 15/5/2024, paid Chinnumart 69,500 in full settlement. Actually, the amount payable to Chinnumart for the purchases on 5/5/24 being 72,000, on 15/5/2024 we paid 69,500 to Chinnumart, stating that fully over. So the difference between these two 2,500 is nothing but discount. Clear? Make the payment to Chinnumart. So Chinnu is the receiver, debit him. Chinnumart account debit 72,000. Sir, we are paying only 69,500. Yeah, but the entire due payable to Chinnumart is closed. The entire due is 72,000 is closed to bank or cash. The payment being 69,500, another 2,500 may be gain for us, named as discount receipt. Discount receipt. Is that clear? Question number 4. The next question 4 is one of the comprehensive one. I am going to pass the journal entry and prepare the ledger for that, and finally I will prepare the trial balance. Of course, you know that. Whatever it may be, I request you to understand how you can pass the journal entry and transferring that from journal entry to the ledger and summarizing that as a trial balance. From this route, this is called traditional approach. Modern approach or the practical approach, where we are going to prepare subsidiary books, from there ledger is prepared and then trial balance is prepared. This question I am going to solve using the journal entry, ledger, trial balance. Same question I may again solve using subsidiary books, ledger and trial balance, both the approaches. In practical life, we follow only the subsidiary books approach because that may be comfortable for us. So you need to understand both the methods. So you have to compare the fourth illustration, which is prepared under the traditional method, journal entry model. The same sum is repeated in ninth case, where we are going to prepare the same sum under practical system. You have to understand both. Let's see. Yeah, I am going to pass the journal entries here. Singer was carrying on business in book publications. On 1st April 2024, his assets were okay, as well as he owed. Means we have been given assets and liabilities as on 1st April 2024. It means it's a running business. Earlier year or some years ago, they could have invested money for starting the business. In the last year end, the 31st March 2024, we have some assets and liabilities for this business. In this year, that will be the opening journal entry for me. The assets and liabilities of the previous year end will be the opening journal entry in this very first year. Apart from that, we will now post the journal entries for current year's transactions. So, the transaction list is here. The entry for this is called opening journal entry, and this will be transaction journal entry. In case of opening journal entries, assets are debited, liabilities are credited, and capital is also be credited. The difference between assets and my liability will be called as capital. So in the previous class, I explained that there may be different varieties of journal entries, right? Here, types of journal entry, opening entry. We have completed the opening entry to record the assets and liabilities or capital from the opening balance sheet. And of course, transaction entry, the usual one you follow. The second to 5, closing entry, transfer entry, adjusting entry, rectifying entry. We'll study the rectifying entry in the chapter rectification of error. There is an error. To rectify that, we pass a journal entry which is called rectifying entry. While closing the books of accounts, we need to pass three entries. Three types of entries: closing entries, transfer entry, adjusting entry. You will study this under final accounts chapter. This will study under rectification of errors chapter. Opening entry, of course, we can incorporate here itself. So, we'll be now able to understand opening entry as well as transaction entry. These two will be completed by this time. Now, let's see. I'll start with the capital and opening journal entry here. Question number 4. Yeah. Tell me the journal entry for this. 1124, 1124, 1124. We have assets as well as liabilities. All the assets are going to be debited. What are the assets we have? Okay. Cash at bank, or simply name this being bank. Bank account debit. Value being 35,000. Cash account debit, the value being 3,700, and furniture account debit, the value being 45,300, and stock, the value being 3,51,000, 3,51,000. Amount due from Alex. Alex should be debited because he has to pay me. If I have to pay you, then you are my, say I may consider this being the liabilities, but you have to pay me, right? Alex, asset. Amount recoverable from him, 15. Not only that, Beam, we have Beam account debit. This value being 16,000. He owed 1 lakh to Mrs. Singer. Owings means liabilities. Owning and owing. Owning are the assets and owing are the liabilities. Owning and owing. Okay, own is nothing but asset and owe is nothing but liabilities. So I owe to third party. To whom? To Mrs. Singer. Mrs. Singer's loan. This value being 1 lakh. Not only that, there is one more owing to Charan. This value being 26,000 to Charan. The value being 26,000. During April, his transactions were. So now we have passed the journal entry for what? Opening, assets and liabilities. Now we have to start post all the means transactions here. I'll start from all these transactions happens on April. So I'll pick around 3 transactions. Okay, you can also write. Those who are not completed, come on, join with me to complete this. Yeah. The difference between assets and liabilities will be called as capital to capital. To capital. This value being, find out the balancing figure. Hope it is 3,40,000 rupees. Now I am going to pass the journal entry for the 3 more items, transactions. Second transaction. 2nd April 24. This is 1st April, right? 1st April, this is 2nd April. Paid wages and salary by check. So we are making the payment for wages as well as salary by check to bank. To bank. This value being 6,000. This value being 6,000. Third one. 3/4/24. Purchased on credit from Charan, 5 financial accounts book at rupees 500 each. Charan, name is given. If the name is given, we assume it may be credit purchases. So purchase and the party's name will be considered here. Purchases account debit. Purchase account debit to Charan account. To Charan account. 5 financial accounts book. Every book cost us 500. So 500 into 5, 2,500. 2,500. And sold goods for cash to Magesh. This happens on 4th April 24. Sale to Magesh, though the sale may be to Magesh, name is given, but it's a cash transaction, so party's name is not matter for me. The journal entry in this case being cash account debit to sales. The value being 5,000. The value being 5,000. And the same date drawn for private use. Private use. Then we have to debit the drawings account, and cash is withdrawn, so cash is going to be credited here. So drawings account debit. Drawings account debit to cash. This value being 3,000. Clear? So I have posted up to 4th April. The transactions up to 4th April. Let's now pick some more transactions. Transactions from 6th to 10th. Okay. Around 3 more transactions. Okay. 6th transaction on 6th April 24. What happens here? Pay telephone bill in cash. So telephone bill account debit to cash. This value being 1800. On the same date, issued check in favor of Charan and discount allowed by him 1,000. Charan, 26,000 rupees actually we have to pay. On payment, he says that so you can take 1,000 rupees discount, settle only 25,000. So that 1,000 is gain for us. Make the payment to Charan. That too, the payment is in the form of check. So the entry being Charan account debit, 26,000 settled to bank account, but we made payment of only 25,000 from our account, and 1,000 rupees we enjoyed benefit out of this. This is called discount received. Is that clear? 8th April 24. Received check from Beam in full settlement 15,500. The amount recoverable from Beam in this case being 16,000. We received only 15,500 and consider this being completely settled. Okay. Then the journal entry being that to be received in the form of check. So bank account debit, discount allowed account is loss or expenses for me to Beam. Though he has paid only 15,500, I consider that Beam's loan 16,000 is completely settled. Means I am allowing him a discount. Discount is my expenses debited. Now 10th April 24. Sold to Alex on credit 10 cost account books at 8% trade discount. So list price being 500, so 500 into 10, 5,000 rupees, but there is a trade discount of 8%, 400. That is not a matter for my calculation, so I am going to consider only 4,600. Sales to Alex in credit. So we need to consider the name of the party. Alex account debit to sales. This value being 4,600. Okay, 4,600. So we have completed up to 10th date. The transaction up to 10th April. Then from 11th onwards up to 20th. Let's try. 11th 11th April 24. Beam check returned dishonor. The entry we passed for receipt of beam check is now reversed. So which is this one? I'm going to reverse this one. This one is going to be reversed. The entry being beam account debit 16,000 to bank account 15,500 to discount allowed reversal or simply allowed account here 500. The entry what we have passed is just reversed. Another one being on 12th April 24. Sold to Arun on credit 5 FM books at rupees 600 each. So credit transaction, so Arun name will come. Per book cost us 600, 5 books 3,000. So Arun account debit to sales. Arun account debit to sales. This value being 3,000. This value being 3,000. On 15th April 24. Cash sales to Anand. Cash sales. Then you will get the collection directly. So cash account debit to Anand. Cash sales to Anand rupees 6,000 each. Cash sent to bank on the same day. Bank gets the money, bank account debit, and for cash it's outgoing of cash to cash. This value being 5,000. This value being 5,000. Is that clear?
Sir, cash to sale account. Cash to honor.
Yeah. Cash to sales account. This is cash to sales account. Okay. Next. So we have to go for which date? Date 20. Okay. 24. Purchased two-wheeler on credit from TVS and Co. 35,000. Issued check in part payment 10,000 rupees. So then we got two-wheeler here, asset, two-wheeler, account debit. The worth of two-wheeler is 35,000. But immediately we made a payment of say 10,000 rupees. Balance will be payable later on. There will be to TVS and Co. Clear? Or you can pass two entries like due entry first and 10,000 payment entry second. That way also you can pass. Hope now you'll be able to understand the 20th one also. So we still have few more items. 22nd onwards. I'll pick from 22nd to 25th. Okay. Beam declared insolvent on 22nd April 24. Beam declared insolvent. A dividend of 60% is received in cash for his estate. So actually from Beam I have to receive 16,000. Initially we collected this money and later we found that money is not really in cash in our account, so we cancel. It means we have to recover 16,000 rupees from him. He became insolvent. His position is not to solve his financial commitment. Then it will be settled through the court. Court says sell all the assets and list the liabilities. The liabilities may be 1 lakh, and after selling the asset, the amount realized is only 60. This is what about the realization of assets. This is what about the liability payable. Definitely is not capable of settling the entire 1 lakh out of the amount he has. Asset is only 60, but liability is 1 lakh he doesn't have. Then court says divide the assets amount available divided by liabilities payable 60 paise. It means for every 1 rupee 60 paise will be payable. Hereafter no creditors will disturb him. If it is disturbing, then it's a contempt of court. Then the court will take the actions. So through the court he says I am capable of paying only 60 paise per rupee. Out of that 1 lakh liabilities A, B, C, like n number of lenders may be there. A, one of the lender, he might have paid only 10,000 rupees. He says, give me 10,000 rupees. The court says, no, it's not possible. Now for him, only 60 paise in a rupee means he will be getting only 6,000 rupees. B, he might have given 20,000 rupees. He will be getting 12,000 rupees. The proportionate of the amount payable to the third party, they will get the amount available by selling the asset. Similarly, in this case, B became insolvent, for whom 16,000 rupees is due and he has to pay me 16,000 rupees. Court says he is capable of paying only 60 paise in a rupee. It means 9,600 is recoverable. Balance non-recoverable 6,400. The non-recoverable part in the hands of the recipient is bad debt. In the hands of the payer, the Beam's account, no, named as deficiency. For him, it's a bad debt. In his book, he will record that as deficiency. Okay. Let's see the journal entry here. Cash received. You can show this being either cash or bank. Okay, I may show this being cash. So cash account debit to Beam account. Amount recoverable from Beam being 16,000. Nothing is recoverable hereafter. I got only 9,600. To the extent I didn't receive is named as bad debt debited here. Bad debt. Clear? Cash account debit, bad debt account debit to Beam. What happens in the books of Beam? Okay, he says this is Singer, right? Singer. For him, Singer is a debtor, right? Beam says I paid the money to Singer. Singer account debit. The amount paid is 16,000, but he is capable of paying only 9,600. To the extent money not payable is named as what? Deficiency account. This is called deficiency account. Is that okay? Most of the time you might have seen only the bad debt entry, not deficiency entry. Why? Why? Okay, as an accountant, will you work for continuing business or closed business? Continuing business. Otherwise you don't get fees. Isn't it? Already they are in deficiency. Would you like to come and join with our company, sir? What's the nature? I'm supposed to close. We don't have the money to settle the liabilities at all. Then why do I want to work? Will you give me any money? Right. So that's why most of the cases deficiency account may not exist. In case of partnership on dissolution, all partners insolvency, we have the deficiency account where we are going to incorporate. At the time of closure only the deficiency will come. Is that clear? Hope now you'll be able to understand the logics of bad debt and deficiency parallel entry. 23rd April 24. Old newspaper sold for cash. What is the journal entry? You are getting cash. Am I right? So cash account debit to old newspaper. Old newspaper. Okay. 250 rupees. And on the next 2 days later, 25/4/24, old furniture sold for rupees 2,500. Cost is 1,000, 4,000, and where the cash realized is 2,500. What about the 1,500? The 1,500 being the loss. So you get the cash debit 2,500. You lose loss on sale 1,500, and you have furniture worth lost here or reduced here to the extent of 4,000. Clear? Hope you will be now able to understand all these journal entries here. After 25, we still have few more illustration journal entries 27, 28, and 30. Right. Purchased from Kumar 50 cost account books at rupees 220 means 11,000. On which date? 27th. 27th July 20, April 24. Purchased from Kumar. As nothing stated, we assume it may be the credit purchases. So, purchases account debit. The value being 11,000 and that two credit purchases. So, I have to write the name of the party, Kumar account. The value being 11,000. The value being 11,000. Arun returns one FM books as defective. Arun returns one FM book as defective. Now cross check. What about the value at which we purchased from Arun or sold to Arun? It's a sales, right? Where is that entry? 12th, okay. Arun. 5 FM book per book cost us 600. Now it's a sales return. One book is written on the same date. Then sales return account is going to be debited. Sales is a revenue item. Sales return is a reversal of that. So it's sales return account debit to Arun. This value being 600. Value is not given. Now you have to find out the value from the previous transactions. 28th April 24. What happens here? Received from Alex check in full settlement 14,500 of the amount due on 1st April. Of the amount due on 1st April. 1st April, what is the amount we have the due? 15,000. For that 15,000 rupees, we received 14,500. 500 rupees is pending here. Or maybe discount like. Received from Alex check, then bank account debit. Bank account debit. And discount allowed account debit to Alex account. The amount recoverable from Alex 25 completely closed, but we collected only 15,000, right? 15,000 is completely closed, but we actually received only 14,500. 500 rupees is for discount allowed. On the same date, send cash to bank. Send cash to bank on the same date. The journal entry being money goes to bank, so bank account is going to be debited. Bank account is going to be debited to cash. This value being 11,000. The next one being on 30th April 24, the last day of the month. Interest due to Mrs. Singer 9% per annum for 1 month. What is the amount payable to Mrs. Singer? 1 lakh. For that 1 lakh, 9% interest payable per annum, but 1 month due is there. Payable, outstanding. I hope the value being 750. Okay, 750. Interest account debit to outstanding interest. Outstanding interest represents whom? Mrs. Singer. So you can use the Mrs. Singer's loan account also instead of outstanding interest, also correct. Because interest is a nominal account. Before or after some outstanding or accrual or in advance terms used, then it becomes representative personal account. Whom it represents? Either it may be the employee if the salary may be outstanding. Rent outstanding represents the landlord. Interest outstanding, the lender. Here, Mrs. Singer is the lender. 750. Clear? Goods taken for domestic use on the same date. Drawings account debit to goods. If the goods taken for purpose other than sale, then it will be credited to the, is a debited to the purpose and credited to the purchase account only, the value being fined. Hope now you'll be able to understand all these things. Clear? Any doubts here? So I have passed the journal entry. Now next step is, from the journal entry we have to prepare the ledger. From the journal entry we have to prepare the ledger. Is that clear? Now ledger preparation. Ledger preparation. Okay. So ledger preparation. Now first one being the bank account. First will be bank account. I put the tick mark and prepare here bank account. Bank account. How to post now? How to post? If it is being the opening journal entry, if the items are in debit side, it represents debit balances. Put the value in the debit side as balance brought down. Balance brought down. Which sign? In the debit side. Balance brought down. This value being 35,000. Okay. To side and by side. Just write once to and by. Rest you can carry on with that. Okay. I'll finish up the bank account first of all. Then I can go on for the next one. Now, here also we have the bank. For the journal entry, transaction journal entry, how can you write? If the bank account appears in the credit side, put the value in the credit side. The purpose should be in the description side. The purpose is the other way, the wages and salary. Purpose is the wages and salary. In the credit side of the bank account, write 6,000 stating wages and salary, right? So wages and salary. Wages and salary. The value being 6,000. Clear? Next, where do we have the bank account? Here is by Charan account 25,000. By Charan 25,000. The next, here is to Beam account 15,500. To Beam account 15,500. Okay. Then here by Beam account 15,500. Isn't it? Then to cash 5,000. Then by two-wheeler 10,000. Two-wheeler 10,000. Then to Alex 14,500. To Alex 14,500. Finally, we have this one also. To cash 11,000 rupees. Come on, tally this and find out the balance. I think the total being 81,000. Here 81,000. balance carried on 24,500. Isn't it? So balance brought down 24,500. What balance is the bank account here? Debit balance or credit balance? Huh? Debit balance. How can you say? The balance brought down appears which side? That's a question. You just ask always in which side the balance brought down appears. If it appears the debit side, it's a debit balance. Debit balance represents either asset or expenses. Clear? Then now let's move on to the next one. Cash. So I'm going to open the cash account here. In case of opening journal entry, the value 3,700 should be posted in the debit side as balance brought down. Balance brought down. Clear? Then find out the cashes here to be recorded. Cash transactions. 2 sales 5,000 rupees. 2 sales 5,000 rupees. And by drawings 3,000 rupees. And by telephone bill 1800. 1800. And then 2 sales 6,000. Then 2 beam 9,600. And 2 old newspaper 250. Then 2 furniture 2,500. 2 furniture 2,500. Then by cash 11,000. By bank, okay, by bank 11,000. And that's all. Here is okay. By bank 5,000. Okay. First one is 5,000, next one is 11,000. Okay. 5,000 and 11,000. Tally this and find out the balance if any. The total being 27,050. 27,050. Balance carried on 6,250. 6,250. Clear? Cash account. Now we'll move on to the furniture here. Furniture. So furniture account. I start with the opening balance 45,300. Balance brought down. Balance brought down 45,300. Clear? And where do we have furniture further? Here is furniture 4,000. The opposite items cash 2,500 and loss on sale 1,500. You have to post both by cash and loss on sale 2,500 and 1,500. No more transactions, so close this. 45,300. 45,300. Balance carried on 41,300. Balance brought down 41,300. Is that clear? Then we go for stock. So here is stock. Debit side Balance brought down 3,51,000. So balance brought down 3,51,000. We have only one transaction. So you leave it here itself. You no need to tally this. The balance brought down, if you tally, and you will get the same balance brought down in the same debit side. So you can put there itself. We'll move on to the next one. Alex, debit side, balance brought down. Okay, the value being 15,000. Am I right? Yeah, 15,000. And here is 10-4. Alex, two sales 4,600. 4,600. And here is Alex, buy bank, buy discount allowed. Okay, buy bank and buy discount allowed. Bank being 14,500, discount allowed being 500. Total this 19,600. 4,600 is the balance. Balance brought down 4,600. Alex one is over. Then we go for beam. Debit side 16,000. Balance brought down 16,000. And we have beam here. Buy bank and discount allowed. Buy bank and discount allowed 15,500 and 500. And here is beam. Okay, here is to bank to discount allowed. To bank to discount allowed 15,500, 500. And then here is buy cash, buy bad debt. Buy cash, buy bad debt. 9,600 and 6,400. On tallying this book is closed completely. We don't have any more balances. 32,000, 32,000. Mrs. Singer, this shows in the credit side, means the value should be in the credit side. Balance brought down in the credit side 1 lakh. Balance brought down in the credit side 1 lakh. No other transaction, leave it as it is. Let's go for Charan. The value is 26,000 in the credit side. Balance brought down 26,000. Find out the transaction related to Charan during April. Of course, there is a further purchase 2,500. Okay, buy purchases 2,500. What more activities are there with the Charan? Here is a payment to bank to discount receipt. To bank 25,000. Discount receipt 1,000. Okay, 1,000. Is there any other transaction for Charan? No. So we have the balance here 28,500, 28,500. We have balance of rupees 2,500. Balance carried on. Balance brought down here 2,500. Charan over. Then we'll go for capital. The balance in the credit side balance brought down 3,40,000 rupees. There is no any other adjustments here. Then transactions. We'll start with wages and salaries. Wages and salaries. Wages and salary to bank, right? To bank. To bank. The value being 6,000. We don't have any other transaction, so you tally this. Okay. Find out the balance carried on. And it becomes balance brought down. Clear? We got this answer here. Now we'll move on to the next one. Purchases. Purchases account. Purchases account. In the to Charan. The value being 2,500. 2,500. Okay. $2,500. Okay. Next. Related to the purchases. Only drawings. Is there any other? Here is 27. To Kumar. This value being 11,000. Then apart from that, we have only the last transaction by drawings. By drawings. The value being 500. Finish up that tallying this 13,500. 13,000 rupees will be your balance carried on. Balance carried on. Balance brought down will be 13,000. Okay. Now we have to record the sales here. Sales account. By cash 5,000. Find out other sales transactions. Here is by Alex. How much is that? 4,600. Then Arun 3,000. By Arun 3,000. By Arun 3,000. By cash 6,000. By cash 6,000. Then that's all. So you can tally the sales account here to find out the balance here. Total 18,600. Am I right? 18,600. 18,600. Balance carried on 18,600. Right here balance brought down 18,600. Next we have drawings to cash. The value being 3,000. 3,000. Find out further drawings. No. Last one, two purchases 500. Two purchases 500. Total being 3,500. 3,500. Balance carried on 3,500. Rewrite here balance brought down 3,500. Clear? Drawings over. Then go for telephone bill. Telephone bill. Two cash 1800. Two cash 1800. Only one transaction 1800. 1800. Balance carried on. Balance brought down 1800. 1800. Then we have discount received. Discount received account. In discount received by Charan 20,000 rupees. By Charan 1,000 rupees. And any other discount received? That's all. Keep as it is. Okay. We can finish up tallying this 1,000. 1,000. Balance carry down 1,000. Balance brought down 1,000. Clear? Then what more? Discount allowed to beam. Discount allowed to beam 1,000. And discount allowed reversed by beam 500. So both are 500. Okay. Beam 500. And here is 2 Alex 500. 2 Alex 500. That's all. 1,000. 1,000. 500 is balance carried on. Balance carried on. Balance brought down 500. Clear? So then 12/4 Arun new account comes here. 2 sales 3,000. Arun account 2 sales 3,000. Find out further Arun account here. Here is sales return. By sales return 600. That's all. Finish up tallying this. 3,000, 3,000, 2,400 balance carried on, balance brought down. 2,400. Clear? After Arun, second column, first column over, second column over, we now go for the third column. Two-wheeler. We get two-wheeler. Okay. In two-wheeler, 2 bank and 2 TVS and Co. 2 bank and 2 TVS and Co. Bank is 10,000. TVS and Co. to whom we have to make the payment later on 25,000. So 35,000. 35,000. Balance carried on. Balance carried on. 35,000. Two-wheelers value. Balance brought down. 35,000. Two-wheeler is over. Then TVS and Co. Buy two-wheeler 25,000. TVS. Buy two-wheeler 25,000. Balance carried on 25,000 and balance brought down 25,000. 25,000. Then we have a new account called Bandit 2 Beam 6,400. Bandit 2 Beam 6,400. Balance carried on 6,400 and balance brought down 6,400. Clear? Then we have old newspaper. Buy cash 250. Old newspaper. Buy cash 250. Balance carried on. Balance brought down. Clear? The next, loss on sale, 2 furniture 1,500. Loss on sale. Loss on sale. 2 furniture 1,500. Okay. Balance carried on 1,500. Balance brought down 1,500. Clear? Still we have Kumar account. Buy purchases 11,000. Kumar account. Buy purchases 11,000. As we have only one item, I leave as it is without tallying. Right. After Kumar, we have sales return. Sales return. Okay, okay. So, okay. It should be debit balance. Good. 2 furniture and this will be balance carried on, balance brought down. Clear? Sales return value being 600 to our own. To our own. To our own. Value being 600. Only one item. I leave it as it is. Then what more? Interest account. Interest account to outstanding interest 750 and outstanding interest there by interest 750. We have posted everything. We have posted everything. Is that clear? Finally, I am going to prepare the trial balance. Trial balance. Okay. Record all the accounts balances. Bank account shows a balance of 24,500. If it shows in the debit side, put the value in the debit side, else credit side. So bank, this value being 24,500 and Cash 6,250 debit side. And furniture 41,300 debit side. And then stock 3,51,000 debit side. Three lakhs 51,000. Alex 4,600 debit side. And Beam has no balance. Mrs. Singer credit balance 1 lakh. Mrs. Singer loan 1 lakh. And Charan credit balance 2,500. 2,500. Capital credit balance 3 lakhs 40. 3 lakhs 40. And wages and salary debit balance 6,000. Wages and salary debit balance 6,000. Purchases debit balance 13,000. I put the value in the debit side. Sales credit balance 18,600. 18,600 credit side. Drawings debit balance 3,500. Telephone rent 1,800 debit side. Telephone bill 1,800. Discount received credit side 1,000. Discount allowed debit side 500. Arun debit balance 2,400. Okay, 2,400. Okay. And two-wheeler asset debit side 35,000. TVS and Co credit balance creditors 25,000. Bad debt loss debit balance debit side 6,400. Old newspaper sold credit balance, the value being 250. Loss on sale furniture also debit balance. Kumar shows debit balance 11,000. Sales return debit side 600. Interest account debit side 750. Outstanding interest credit side 750. Come on, get me the total of trial balance. So 4,99,100 is the total. Now it's agreeing. If it is agreeing, at least we have not made any arithmetical errors. Is that okay? Maybe there may be some compensating error. So all these things we'll study along with the errors chapter. In the next class, I will solve the same illustration using some computer softwares like a Tally. Tally is a paid version. We have a free version. So we try to solve using the free versions of this illustration that you can use for your small business also, right?